Hello, 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 hello. Let me see if I'm live. Yesterday I was super energetic. I don't know why. Super energetic. I don't know why. All right, we're good. Let me lower my volume and add some people. In the meantime, we could look at some of those numbers. I'm trying to get these. Xavier. Am I missing anybody? I think that's everybody for now. Let me see if I could share it to another group. I don't think so. Anyways, good morning. It is 9/23/2021. All right. So now if I do them every day, it's going to be kind of boring. But AVX hit all-time high today. What? AVX is blowing out the water. AVX is doing good. What else is about to hit all-time high? Cosmos did really good. Luna. It was Luna and what else was at the time? I forgot. It was Luna and another one. They're like connected. Quant's doing good. Ave. Okay, that's the all-time high leaders. Who's the biggest loser today? My favorite investment. I don't even think I made money off ICP. I think I just lost. Bitcoin Cash still doing horrid. Doge went up a little bit. Went up a bit. See the top 10 coins. Top 10, we got Aave coming in, Luna coming in. They moved up. They're pushing out Uniswap, Argo, Chainlink, Litecoin is at 15. Bitcoin Cash is at 16. Maddox at 18. Maddox not doing anything. This is a silent fish. But look what it did before, though. 9K. That's crazy. I think eCash is just starting. 33. eCash is cracking. That got potential. Except this market cap is too big for its potential. It still could like double and triple in like 90 days, but yeah. Shiba Inu looks like it's making up for the loss. All right, back to the chart. So, looks like we are pushing into this gray zone, the grace period. Dominance is 43.17. I should put that in there, each one, so I can know. This one says 43.9. I don't know why. It's a green day, but it's expected. Like, this shouldn't be far-fetched anymore. We're looking. We found the bottom. We identified it. We made a trade. Soon as we saw a J, soon as we had some type of confirmation of the direction, and we got another green day so far. So far, I don't want to have to go through these charts every couple hours. I'm trying to get to a point where I could trade passively. But let's take everything into consideration. I had a note. Bitcoin is the compass and ETH is the chop of the water. That's hilarious. What else did I write here? New note, new dope. Can I delete that? Trash. New note, trash. And now let's take this one. All right. So, analyzing for the day cycle. For ETH, right? What am I analyzing? So first, identify the bottom of the cycle. So how you identify the bottom of the cycle is you would look for where the price is at its lowest, and it doesn't matter what. Like, I could go in anywhere. Wherever the price is the lowest, that's where you want to identify the bottom of your cycle. Like, that is the area where the cycle is going to go in a upside down U. So it goes woo, or it goes woo, or goes woo up. But it has a starting point, just like a hill. And you have the beginning of the hill, and then you have the end of the hill. And that's just like of any hill of any elevation and any elevation that you're going to be driving across or witnessing, you're going to see a top and a bottom. And that's what it is. And it doesn't matter how volatile the market is or what you're trading, you're going to have a bottom and you're going to have a top. And you're going to have another bottom. And I guess that's kind of like that. It's a 3-prong system. It's A, B, C. So if I was doing this, it'd be A, B, C. That would be the cycle. This wants me to go more. So like okay. And what I was taught originally was this. So when I was learning from, so I ended up signing up to like Orgasmic Crypto Channel, and I signed up to a few other crypto channels, and they would have this where you have a bottom, you would have, this would be the whole cycle. So it would be breakout, retraction, breakout, retraction, and then this is where you would take your profit. So they would take profits here, here, and here. And that's how and that's why this tool is put in this way. It's ABC, but you would do it like this though. So they would take it, so they would go I was doing this before, but it never lined up. And then you have a big breakout up here. So like they would do this, and I didn't do that anymore. All right, so first of all, we identify the bottom. It's 3 parts: A, B, and C. A would be your bottom, B would be your top, C would be your retraction. And it doesn't matter about these small retractions. They don't matter. I mean, if you were being day tradey, this is where you will you pull profit, put it back in. But I don't know how to identify this. I don't want to go and be like, I want to show you how to, on the 4th green candle, then you take out money because, on the 5th candle it's going to go red. I don't want to say that. I don't want to say that at all. That's bad. So that's the first part of analyzation, is I would just want to identify the bottom of the cycle. This is what I'm doing, and this is where I've evolved to. But there's different versions of it. or there's different. So we have this bottom of the cycle and this bottom of the cycle where it started. The top is here, and then the retracement's very minimal. Like, I don't know, that's like 5%. And it's because it broke resistance, which we'll talk about next. Because I had to add something new to what I was doing because I didn't know for sure. Let me see. Cool. I'm just taking a second to check out the key limits. Making sure if anybody's paying attention, or if I get any questions. I was supposed to reread all that stuff for Don yesterday, but I haven't did that. I'll do that later. I just want to keep getting. I'm getting back into flow, and I want a free flow. Ugh. There we go. I don't know. I don't have my lighting like I want it. I don't like the highlight on the top of my head. I don't like my crow's eyes because I have top lighting here. I have a light right there. I don't like that. That'd be better. And I don't like. I don't have a good key, and it's very harsh. It's not soft. That's my personal shit that I'm talking about. Anyways, back to this. So let's put that there. Okay, cool. So first you want to identify the bottom of the cycle. And it doesn't matter what it is. You could be arbitrary at first because eventually the bottom of the cycle will be known to you. Once you go through a massive sell-off and you misdiagnose or you miscalculate where something's at, you will definitely see it in 30 days, 40 days, 50 days. Sorry you have to look at it so long, but I'm not talking about an amateur way of figuring things out. I'm talking about a day-to-day thing, like something that you're going to do long-term investing. Like, how long are you planning on investing? If you're not planning on investing for 5 years, I'm not interested in. I'm not having that conversation with you. Like, I'm not having the let's day trade conversation. I'm not interested. Like, I'm just not interested in trying to scalp at this moment. That's for where I want to be financially. If I lose money scalping, I would be very my emotional level won't allow me to day trade at this point. I'm already getting more emotional than I want to a point. I have it in check, but still I could get, it could get outrageous real quick. So, okay, with that said, bottom of the cycle. I repeated it like 1,000 times so far in this video. Hope it's pounded clearly. I label it. Now, the top of the cycles I don't label because I don't care. I don't really care when I see the top of a cycle. But I will be like, once I have my bottom of the cycle, it's like inherent that the top of the cycle will be semi-known. But I'm not really interested in that. At this point, I'm considering doing this action. I'm considering... See, I could see this 28%, right? I want to set a trade at 20%. If I have a bottom, I want to set my trade for 20%. So if my trade was 18.6, I would want to make a safe bet trade of a 20% profit taking at 2100 or 2180. In this scenario. So I want to kind of like this is where I'm very slow to commit because it's like driving your car when you don't know how to drive and I'm saying, "Hey, do parallel parking at full speed." Or we're going to be merging into traffic and the driving behavior of the people around you are a little bit more erratic. We're at full speed here. Once that trade is made and once we're pulling out, we have to have some type of understanding of what is a safe, safe. What is a safe way of getting or combing, we'll say combing profit off of this system? What is a safe way of doing that without being overconfident? So after you, so right. So this is the question. I have a question. The question is, what is the safe way of safe way of combing profit? What's the safe way of combing profit? So let's take two scenarios. Actually, we'll take three. We'll take a losing scenario, we'll take a winning scenario, and we'll take a blow off top scenario. So this is just this is a winning scenario. So you have positive action, cool, you're in a winning scenario. So this cycle peaks at 28%. So you got 28% on, we'll just write this on this. We'll just say normal cycle. We're still, mind you, I'm specifically talking about the ETH day chart. So like if you want this to apply to other things, they won't apply one-to-one, but they might apply if you augment. So like if you augment some of the information, it might be able, you could fit this into another box, but it's not meant to be. I'm not saying that I have a PhD in economics. All right, normal cycle. So this, we'll say in this normal cycle example. Oh, that's crazy. All right. I just realized that my my stand shakes. Being nosy, looking at my neighbors. You want to look over? Wait. I could do this now. I have a little bit of. All right. Will it adjust? No, it won't adjust. You can't see outside. It's all good. I was going to show you my neighbors walking to their car. They were distracting me. All right. Back to business. All right. Example. I got ADD. Bear with me. Am I not in focus now? Okay, what is it focusing on? There we go. Okay, this is example one. Can I bring pictures into here? What is Windows? Is it Shift S? It's a Windows Shift S. Paste. Nope, it doesn't let me paste pictures. That's, well, it doesn't matter. It should be better if I'm doing it in text anyway. Whatever. That's cool. I could dig with that. All right. So this is a normal cycle example. I am writing out my thesis here. So the price would have we'll just say that bottom of the price is 0. So that it would apply to anything. You have the bottom of any price, 0. That's where you start your cycle. The cycle starts at 0. Do not put 3,000 all-time high. None of that matters in this scenario. Like that is not what's governing the trading, what you're thinking about when you're making the trade. I don't want it to be like that. That's not. This is my personal thing, so I don't think like that. I don't care what the price is, where the price is going, or nothing. I don't care at all. I just care about where the price starts. So when I identify the bottom, first step, let me see right here. First step, identify the bottom of the cycle. Question. What is the safe way of combing profit? Let's give an example. That's where we're at right there. We're trying to this is going to be my safe way of combing profit. So this cycle, it took 8 days to go to 28%. So we'll realistically say a safe way of pulling profit off of here is 20%. So at 20% of price action, 20. So now I'm giving, so this is now a threshold being met. So once we hit a 20% action, like we hit action of 20%, we have now a threshold being made. What do you do at that point? What do you do when, now if you want to be more safe, I'm trying to go the safe way, right? I'm trying to give you this is my safe way, because I don't want to be like, oh, let me pull 100%, or let me pull this, that, and the other. Like, I don't want to be the that hyper. Okay, not to say that we can't do that, and I will get to that example later. But right now, I'm going to go slow, and I'm going to be going a little bit more meticulous, because I want to find a system that works, that I can feel comfortable, because ultimately, I want to get to a certain price point so I could buy a second house, and I want to be able to help the people around me make money passively, or make money where I could be in charge of them or something like that. Like my sister or my mom, or, if my dad gave me an account, like I really want to take, if you gave me finances, would I be better and be able to show them exactly what I'm doing? So there's no misconception. Because I have had people ask me, oh, can you trade for me? Can you borrow this? And then I was like, oh, some of my friends, I felt comfortable. I was like, hey, let me borrow some money. I'm going to show you what I'm doing. And it was like I've never actually showed them the full process. But I also I was doing it a little bit more organically, where some of this stuff I was just like, yeah, we're hitting a certain amount. Let's go. But that's not what I want to do anymore. Because I lost money here. And I felt like I lost money, and I'm trying to prevent that from happening and ultimately make money. So let's say that I take 20% of price action, and then I want to take out like 20%. Or what is a good, okay, question number 2. This is the second question. Question. What is a good What's a good amount of profit to take? So we're at 20%. We made money. Now you put in $100. How much money should you take off? You made 120. Right now you put in $100. So in this scenario, in the example of a normal cycle, in this scenario, you put in $100. You started at 0, and you went up 20%. So, right, 20. Now I'm going to bring up the calculator. I know I could do this with anything, but whatever. 0.2. You made $120. So now you made $120. Your profit, your gross is 120, and your it's 20. In this scenario. So we're at the scenario where you have put in $100, you made 120. How much money should you take out? Because I got burned, I already got a lesson. I have a lesson learned. So I'm thinking at 20, because I'm not dealing with $100. We're really talking about, let's be realistic here. So let's be realistic. I'm not sleeping on the couch. I just have the bed there, or we put blankets on the couch. Because this is the stressful part. Because when I'm talking about this certain amount of finances, I'm not being stupid. We're talking about, like, how much does the average American make? So, like, let's go from that. Average American income. I know that's far-fetched and stupid. $33,000. You get $31,000, right? We'll just say 32. You get 32,000. How much should you be investing out of this $32,000? What's 20%? No, it's 20. That ain't right. 32,000. I just did this. 0.20. If you can realistically, with all your bills, get $6,000 a year, that's a lot of freaking money. That's a lot of money when you're considering in 1 year investing. So that's a lot of money. That's aggressive, to say the least. Divided by 12 months. That's taking like $500 a month out of your paycheck. So now, okay, you have to think about it. You have rent, car, light, heat, all that bullshit. You have food. And, you're pretty much tapped out. And I'm telling you to take $500 or $250 out of each check and put it aside and say, I'm going to save it. That's crazy. That's food. That's getting groceries for a week or 2 weeks, depending if you're on a family or not. That's, that's gas. That's buying a pair of shoes. That's incidental. Duh. It's hard as fuck to do that. That's ridiculous hard. Anyways, let's be more realistic. Let's do 10%. You got 32,000 times 0.1. Okay, cool. Still a lot of money considering for somebody who's investing casually, but let's get to a point here. Let's break it out. Even though it's a lot of money, it's hard as hell to do this for the average person. How much you willing to risk that? Because the money's there. You own the money. The money is in your pocket already. I'm asking you to invest it. How much do you want to risk of that? If we go 50%, I didn't do that right. All right. To 32,000 divided by 2. Okay, this is going to make sense in a second because I think I got it. I think that 50% might be a decent amount to pull profit. So you set at shit. Fuck. That is hard. This is a hard one to say because 50% at 20% is aggressive shit. That is like almost making no money if you have a well performing asset. It's not making no money. It's making money. All right, cool. We're going to go with 50%. All right. So set a and there's a reason why I want to do 50% of the trade. There's a reason why I want to do 50%, and I'm going to tell you because when I got burned, I got burned. Let me check and see if I'm doing this. 20%. Where's percent? I don't know. This is 5. I guess that's how you do 20%. I forgot where 20% is supposed to look. Right there, 20%. It's after. I'm an idiot. All those are wrong. All right, 20%. It looked odd to me, and it looked odd to put it afterwards too. It seemed like, why wouldn't you just start with the 20%? So 50% of the trade. So $100, you make 120. You'd be taking out $60, which would be equals $60. Right? Now you're taking that out because you identified the bottom of the cycle. Boom, boom, boom. Now you're taking that out. Now another thing I want to say is you're not going to make a trade at the bottom of the cycle. There are wicks here. Let's be clear. So there's going to be wicks at the bottom, and this all is within range. So you have a range of 10% of entry of the bottom of the cycle, and that's okay. Actually, you should be almost like, because I would make my trade right here. So my trade would be there, which is about 2% more. So I'm really only going to be making 8% off the trade, because this right here at this cross right here, I'd be like, oh, that's a good entry point. So that's what we're going to do. We're not going to aim for the bottom. We're going to aim for a safe entrance too. So it's not going to be this. I'm walking you through my current trade too. Like, this is my current trade. I stopped. I skipped the cycle because I messed up. But I'm going to tell you, but in what I'm about to explain to you is how I'm planning on preventing that from happening again. So boom, I take out my 20%. Let's say that it goes up. Let's do what happens at 30%. What do we do at 30%? Maybe we take out some more money. I think we almost shit. And this is where it becomes, I don't know. Do you want to make crazy gains? How do you do that? How do you make crazy gains? So let's go back to there, and then that will leave you 60. Then set a sell order at 30%. Number 5. Or remainder, which is 60. Which is $60. And then that would give you, is that 0.2 was 20, 0.3 should be 30. I don't know. So you have $60. How much do you want to take out? 30%. That's 60 times 0.3. That's $18. Well, we're going to be dealing with thousands, but I'm just doing this arbitrarily with $100. I hope. Yeah, I'm doing it with $100. I don't know. My math might be. No, my math is right. Okay. So that'd be like another. And then I'll be taking out. $60, which equals $18. Right? So now you take out $18, which gives you remainder 60 minus 18, $42. You take out and you have $42 left over. Now that 42 is going to hold, and then unless we would set like one for at 50%. We could either take it all out or okay, this is nuance. So we're talking about nuance. In a certain scenario, it should make sense to take out the rest of your profit. You made 50%. That's huge. Boom. You would take out 100% of take everything out. But you're going to see in an example why you don't. But we have to, okay. I think we're going to have to take a step back because we have to find out what 50% is. So at 50%, we're breaking resistance. At 50%, we broke resistance. So what do we do if we break resistance? We're looking for an all-time high. Let's see. See, that didn't break resistance. This was still within range. I say at 50%, we're now talking about a different trade. Now the asset has performed in a different way. You know what I mean? Like now we're in a new territory. Because this is what happens when we're at the bottom of the cycle and we break 50%. Right here. We break 50% right here. But we knew that we were, but at like 40% we knew. At 40% we have to go back in and figure out what's what, because now we're starting to, at 40 to 50% we're starting to break the resistance line. So let's just stop this right here. 30% we take that, but then say at 40% through 50% we so now resistance and support lines become incredibly important, because now we are once this scenario happens, we're not in normal mode no more. You have to ask yourself after these orders are met, do we cross resistance? Are we poised for a resistance cross? Are we poised for a correction? This is difficult because there's no guaranteed direction. If it's going to go up, down, left, right. No guaranteed direction at this point. You know what I mean? It's just not there. So we're going to take the normal one being about 30%, and that's what we're going to go with. We're going to stop this one here before I start speculating into like very complicated territory. But this should be noted because that's where we're at. But I'm not even going to speculate a 50% trade. I'm just going to assume that we keep the 42, and that 42 is going to roll over back into the rest of the trade. But I'm going to erase this part, but I'm going to say this is a notation like alarm bells. Once you get to here, now there's a cause to do something different when you get to this point, but we're going to assume that we hit 30. Right? So everything is going to be the same on the other one, except we're going to be adding to the 50%. So then the retracement is 23%. We'll do let's say a retracement of 20%. So shit. I guess we could still do it off the 100 would still be in play. Right? So now we're going to, so the 42 is going to retrace by 20%. So now new entry price. So we got a new entry price. I'm going to be augmenting this. This is going to be augmented and I'm going to scrutinize what I'm writing down. I'm trying to commit it to paper, but I'm also trying to like figure out like everything right now. I am so trying to get, I want to get better. At this time, I go through phases. And right now, my phase right now, I am trying to get better. I'm trying to get better. I'm trying to get better. I just want to I want to be able to make a mistake and analyze it. So that's what I'm doing. So, okay, new entry price. We go back down 20%. So the $42. Yeah, this is going to be like the top of this one. We'll say it's the $42. So we have 42 in. So first we have to calculate where the price is at. So we have 42 left over. With the remainder of 42. So we have 42 left over. We have 60, 78. So it's going to be 42 times 0.2. 8.4 minus 42. So it's going to be, the new price is going to be, entry price is going to be, the new bottom or the new zero is going to be 33. So my $42 turns to $33.6 and my entry price. So I'm going to be retracting down to this entry price of $33.6. Then I'm going to be adding, what's it, times, and then I'm going to be adding the $78, $678 plus $78, which gives me a new total plus $78 gives me a grand total of $100.06. Or $100.60. So this is with a principal profit. So I come back into the trade with this scenario. I come back into the trade. So new entry price would be $36 or $33.6. New entry price. Add what I took out. Add my, what is that? When you pull it from a trade, I guess add the trade from the top of the trade. Adding what I back, which would be $78. Giving me a new grand total so that's So this is real money now that you have now added to. This is the real money that you added to your this principal profit is different. So like this is like going back into time, and this is like going back into time and adding $11.60 to your initial investment. And this is just doing this over the course of 28 days. If you do this, for 11 times. So now let's take this. So we're just gonna take the we're just gonna say, but it's not gonna be like this, because you're gonna go. It's gonna be 111.60 with a principal profit of 11, but it's gonna be more the next time. So it's not going to be just 1-to-1 when you come back. You're not going to be every 28 days you make $11.60. It's going to be, you're going to make $11.06, but then it's also going to add to the other $11.60. So the next time you go back into your trade, oh, that's what it's doing. Oh, it was focusing on the microphone. Okay, I got it. I was like, why am I so blurry? This whole time it was bothering me. The lighting's bothering me. Focus is bothering me. Everything's bothering me. So what's going to happen is the next time the next trade, you're not going to add another $100. You're going to be off of that original trade when you go to your next trade. So now we're going to be, that was top of the cycle. So right here, we'll put, this is top of the cycle. It's important to identify that where this is at. This is top of the cycle in a normal thing. It's about 20-30%. 30% being a lot more aggressive, 20% being normal. Not normal, but like being modest. And we're going to talk about this 40-50% stuff, because now this is a different type of trade, because we have to be thinking about reinvesting in here, or holding the line, or because we could be potentially missing out of another 30-40% of profit. Like, this is crazy. Like, there's a lot of money to be made, and we want to be poised to make that money here. All right. So what's going to happen is that $11. So if you did this 12 times a year, it's actually 11 times a year with Ethereum. Ethereum is 28 days. Or it's between 28 and 32, so I would say like 32 days. So it was like 11 months. So this 11.6, if we just did $100 every time and just pulled 20% times 11, you just in trading to your principal are adding. And it's not going to be this. The number is going to be higher. You're going to be at $100.20 in, like, beyond your principal profit. So you could take your principal out, and you'll still have, after 11 trades, $127.60. That's this scenario. This is like this is what that scenario is. And I get it. It's going to be, this is a little complicated, but not complicated. It's just what it is. And in my head, this is what I've been developing in my head. I just didn't, spell it out. This is me writing it out. So over the course of a year, it's not that much. So you're going to do, what is, if I really spelled it out, right, it'd be like this. So you got, what's 116? No, that's wrong. It's 111.6 divided by 100. That's what the multiplication needs to be, like 100 times 100. Right? 1.6. What was that? It was 116. So 116 was the profit, right? So I could see. So I moved the decimal over to here. 0.116. All right. So a 0.2 plus nope, that's wrong. 0.32 plus 11. So that would be my new number. That would be the second one. So it'll go from 100 to 116 point or 111.6. Then my next one would be 133.92. Then that one has to be times 20%. It's $26 plus 133.92. I feel like I already messed something up. So it's exponential growth. So the growth starts to go in exponential. It's not just adding $11.60 because you're going to be pulling more profit from your trades. It starts to get bigger. You start, getting closer and closer and closer to 200 just by making good trades. I think that I didn't in this scenario. This is not the real numbers because the first number is right. The second number is wrong because I'm not taking into account for the 20% deficit. So there's a 20% deficit that should add to this one and make it less. So those numbers are off. It's just wrong. I saw myself doing the math wrong while I was doing it, but I was showing you the numbers going up. And that's what's going to happen. The number's not going to be just plus from your initial investment. Your initial investment doesn't print you, that 20% onto the thing. Until your principal, your principal, the 20% adds to the conditions of the market. So I guess this is where people start getting confused because your $100 turns to, so in this scenario, we'll just take these numbers. So this 1700.98 goes up to 2,335 and then retracts to 1785. So your principal is going to ride that out no matter what. Your trades will give you pulling profit will add money to your profit. But if let's say you do nothing, I'm giving you an example of where I want to go. This is where I want to go. I want to go put my initial investment here at the bottom of the cycle which I identified. Set my 20%, set my 30%, take all that profit and stick it into the bottom of the cycle. If I don't hit my 30%, I just, get less money in there. If it goes up, so now, okay, so wait. Right, no. And then make reinvest. That would be the whole thing. Let me read it out loud. Analyzing the day cycle for ETH. First step for identifying the bottom of the cycle question. What is a way of combing profit? Normal cycle example. Bottom is 0, 20%, 20% of price action. What do you question? What is it? What is the good amount to take at 20%? So you have 100. You got 20%. Your profit is 20. Taking out 20% of profit, or 20% of your net of gross. You sell 20%. It gives you $60 in return. It seems like I've written it like freaking horrible, but I think that it's where I'm at right now. I think that I'm gonna have to analyze this and be able to explain it a lot better later. But I'm gonna put this into Facebook. So if you're watching live, you get everything I just wrote. I just wrote it out, stuck it in here. Perfect. So you have it now to pull from. That's everything that I discussed. Maybe I do that in the thing and I write more stuff down and I present it to everybody that's watching and we go from there. So that's an example of how I want to deal with a normal cycle. Now, let's say that we're not dealing with a normal cycle and we're dealing with a very aggressive upward cycle. At around 40%, we're gonna be at a resistance line. If we break that resistance line, and this is my new thing, do I reinvest? Now, if you want to be aggressive, you reinvest everything at the 50% line and you hope it doesn't crash on you. I don't like to set stop losses. But you reinvest or you let that 50% that you have remaining slide? Do you go for the slide? Maybe put that 20% back. Put 20% at 50%. And then do it again. Reset at. I guess we could do that. If we break 50%, do we do another reset for 20%? Another modest reset in here. We make a new trade at the resistance cross. I'm going to put that as a question. Do we break resistance because this is something that doesn't happen very often, but when it does happen, it's amazing. It happens a lot, but it happens. You don't know what the normal of the cycle is going to be yet. So this is fighting inflation, but we're good. So we go up, we break resistance, we identify resistance being broke because we've set two marks. We set a mark at 20% and we set a mark at 30%, which is good profit. And then we still give us wiggle room for this blow off top, and maybe we do another sell order at this higher price, which also puts us in a position to lose a lot if it crashes. Skimming off. All right, cool. We're going to leave this alone. I feel like a lot of information was passed today. This is kind of like I'm trying to communicate what's going on in my head over the last cycle. So this cycle and this cycle, these two cycles, from this cycle and this cycle and this cycle, I was thinking about what happened here. And how do I trade this cycle? Because anybody could be like, you just hold your money down here and you wait for it to go all the way up here. Yeah, that's stupid people talk. Like, you don't do that normally, because if you do that, then you run the potential of not making any money off of the run. Because if it corrects, then you go back to zero and you make no money. But you're like, but I didn't make. This is FOMO. But I didn't make 90%. Yeah, I don't think that I'm ever going to go for a full 90%. I think this is what was deterring me from getting into trading in the first place. Like, all you have to do is put your money in here and then take it out here. You can clearly see it. I know how to read candles. When that thing happens and people say that, it bothers me, because that's not how trades work. Not in my book. My book doesn't say, hey, every trade you're going to make is you're going to have a bottom of the cycle and it's going to go straight up 90%. I don't want you, that to me is not something, that's not a system I could bet on. But it's nice. It went up 90%. I didn't. I ended up coming in. I had to come in like here. I think I had to, like, I took out my profit around here in this scenario. So it was more than normal. And I was writing it by hand. And then when this blow off top happened, I just wasn't ready for it. So I took out 100% of everything. I was so confident in my system. That was not working out for me in this scenario. And I missed all that profit. And it hurt me knowing that I missed that 90%. Like, it devastated me. All right, cool. Now we could take in volume to consideration and everything. So that was a lot, even for me. Like, it was a lot of explaining. I might rewatch it and try to condense it down and redo another video for YouTube that's like a little bit more. I'm going to keep developing in this, and then I'm going to put out the video. But now let's go through the MA and how this could help determine. So in this scenario, we are bottom of the cycle. We have the 200 crossing in through it, and we have the 9 doing its own thing. This is something this is going to be a whole nother analysis point. When is the bottom of the cycle underneath the 200? Does it cross the 200? Does it cross back down through the 200? And does it cross the 200 again? If this scenario is happening, what does that mean? Because this scenario is not this scenario. So this bottom of the cycle is the 200 is well below the 200, and we are bouncing off of air. We're bouncing above the 200, but we're bouncing off of air. There's no MA indicator that we're dealing with. We're dealing with MAs, but we are forming at times a bull. This is a bull identifier. So you have the 250 and 9. So if you have the 259 lining up like this, red, blue, white, you got this. Stars and stripes. This is this scenario. Look, right? We start identifying our full bull market at this 9 crossing the 50. When that 9 crosses that 50 up, and there's space, and you have a gap underneath here, this is what you get. That gap is getting matched from the 200 to the 50 to the, holy shit. Okay, I got it. That's crazy. Maybe I should write that down, but let's analyze. I'm gonna leave the analyzation of the MA later, but let's write some notes. So that's analyzing for that. Let's add a new note. This is analyzing the MA. Or okay, I got some more vigor because I love what I just saw here. So on this blow off top that we have, all we did was, let's see what the percentage is. That's 30% down. Tell me this is 30%, 40% down. So maybe I could tweak it. Nope, 30% down. So, but let's go reverse it. Let's reverse it. Let's start from the bottom. So we got 80% from the bottom and 40% from 80% from the 200, and we have 40% to the 9. So 200 this makes sense because this is basically half. And it's showing you from the MA point of view. This is just a percentage of MA. So we're 80% from the bottom of the 200 to the 50, and it gives you the full moving average. That's crazy. So this looks like it right here. This is another example. I bet you that lines up. Is it the full boat? So we got 20%. So this next one should be 10%, right? All right, see? See? And no, it's the same. So this might not be the full one. But I'm not analyzing every bull one, but maybe we're getting into something here. Let's keep analyzing this MA stuff. This is gonna be a longer video, and it's gonna have a lot of information. Got it. Now we got the 2 when the 9 is crossing the 50, you can see where the price action is going there. Now we're looking for examples of how to get this peak and how to get this valley. To get this valley, the 9 start this scenario, the 9 is crossing the 50 after the blow off top, which could be happening right here. 9 crosses the 50 and then stays below the 50 until eventually the 50 and then the 200 is squashing into the 50. So they start, the 50 and the 200 start to like, and the 9 is heading to the 200. Now if it goes straight down, it's going to bounce right to the 200. So in this scenario, we bounce right here. If we were to predict, if that was going to be this scenario of a blow off top, but if it deviates from that, it might be going, it should be going into another bull cycle. Let's take the 50 into this scenario. So again, red, blue, white, the 50 getting crossed, it's a retarded indicator. So the 200 never really goes down. It never points down. It's not radical. It's a slow moving growth because it's taking 200 days of price action. So in that 200 days, this doesn't even matter. It pulls it up, but then, it also holds it. So the 50 closing in on it is just a response of the price being up that high in the correction. And if it bounced off the 50, when was the last time we bounced off the 200? This is getting long. I apologize for the length of this one. I don't want to stop until I'm done with my thought. So if I'm keep on going, it's because my thought is not complete, and I want to, I'm going. This is my self-education in the way that my brain wants to start departmentalizing stuff. So apologize. I ain't going nowhere for a while. All right. So the 50 correcting into the 200. If it bounces off the 200, then we get another one of these cycles. But again, this red, blue, white, this cycle, this formation is bull. And the exact opposite when it goes the other way. When it goes the other way, it's bear. But this didn't happen like that. This is rejecting from the 200. That's why I don't feel like the cycle's over. I feel like we have a couple more months of explosion. Now I'm going to go into the trenches. So I think this is the last bull cycle. What is this? This is not the last bull cycle. This is the last bull cycle. Jeez. Look at that big ass mountain. Bring the price in to make sense. This is the last bull cycle. So when we did correct, see when this corrected, the 200 dipped well below the 200 and the 50 dipped well below the 200 and then it peaked over it, but then the 50 never crossed back up, which formed our red, blue, white pattern in the exact opposite of this pattern. So we have red, blue, white going up, red, blue, white explosion, and this is red, blue, white explosion going down. Just pulling the price down, and eventually we hit this. I don't know. This is like a medium price of a bear cycle. I just took some arbitrary shit. I probably have to adjust it. I can't adjust it because there's nothing to adjust it to. I just took a slow moving growth pattern. But when we cross this slow moving growth pattern, this is way slower than this is like all the price of it. We cross this is when we start hitting really good buy opportunities. We took the medium price of all of it. And, yeah, this line right here, woo, good, all the great profit right here. But anyway, so we have the red, blue, white heading south, not crossing back up. Now 50 crosses it. Do we have a part where the 50 bounces off the 200? So this is an example of the exact opposite of what the bull cycle would be. This is examining how we pop out. What people were saying and how I felt was like, wow, did we hit this? But we didn't hit this because, so we have an all-time high, and then we have, this is a dead cat bounce right here. I could even write that in there. That is way too big. Dead cat bounce. That's when you have your all-time high. Let me see. You have your all-time high, and then you have your dead cat bounce. That's when the price goes crazy low, and then it goes up, and people get super euphoric, like, oh, we're going to go to back to the moon again. Check it out. Crypto's not dead. We're going to go crazy. This is a great place to take profits if you didn't pull it over here. Because at the end of the day, if you invested here, hit here, you get here, you're going back down to here, and you're now able to take all this profit and put it in here. It doesn't matter if you didn't take this profit. You still win. Yeah, dead cat bounce. Okay, where are we at now? So that's just analyzing the MA for like a bear cycle and a bull cycle. Bull would be red, blue, white. This is you're driving a Ferrari's going up, and it's completely opened up. There's no cars in front of you. This is you see traffic's coming and you're slamming on your brakes. When it's red or white, blue, red. White, blue, red means that you are going down. And then the nines are bouncing off the 50 all the way down. Till eventually the 9 crosses the 50, and then you have profit potential. Where's your profit from here? That's an insane 152 days, and you get this insane gains. 152%. You put $1,000 in, you pull out 1,500. So now let's go back into where we're currently at. Let me make it bigger. Let's analyze the MA going into again, I'm only looking at Ethereum, and I'm only looking at the 1-day chart. That's it. This is how I'm presenting the price action for Ethereum. So we have the 200, we have the 50, we have the 9, and it's straight up, it's Ferrari. You got it. Ferrari time. You're cruising up. It's going to start, the 9 might dip underneath there, but at the end of the day, you know what's crazy? Those dips below the 50 are lining up at the bottom of the cycle. Just weird to say that. The 9 dipping is showing you the bottom of the cycle. That's crazy. 9 dips, bottom of the cycle. 9 dips, bottom of the cycle. 9 dips, bottom of the cycle. 9's dipping, bottom of the cycle. 9 dips, bottom of the cycle. Crazy. I'm going to write that in there. Okay. 9 MA. Dipping, showing the bottom of the cycle. I'm going to put that as like a weird thing that I'm noticing. So we're red, blue, white. Boom, red, blue, white. Price action's doing numbers. It looks great. That's the Ferrari. That was back in October 20th or October 2020. Boom. And we're just running through that whole cycle for a full year, looks like. 21. Boom. Then we get a sell-off. We get heated up. Where the 9 is going nuts. And then it corrects. Because it has to respond to that. But the 200's not. The 200's holding. 200's like, nah, we're good. And now we bounced off the 200. So in this cycle, if this is just this, so okay. I'm not saying this is this. I'm just saying this is what I'm seeing. I'm not saying this, but it looks like this is where we're at. Right here. If we cross this 50, how long does this take? We'll say that we just get one chance at this. 48 days. Let's say that it's not. Let's say it's not 48. 48 days would be what everybody's talking about. Let's say that 75 days. We have 75 days of insane price action coming up. If this crosses like this and it okay. I have to go back to the other bull cycle for a second and see if I see that pattern where the 9 is crossing the 50. This is deep analyzation. Deep 9 cross, but this is not producing it the way that I wanted it to. It's a slow cross, but even that slow cross is showing exponential growth. And that's crossing the 200. Nope. That's bear. This is bull. So we have this. So depending on how it works, so I saw it two different ways. We saw it go dip, like just completely reject and dip under with a rejection, or dip under with a slow growth back into this. But right here, it's 9 crossing the 50. So I guess when this starts doing the DNA double helix thing, where it starts stranding together, it's really just bounding up for a big explosion. This is the 9 crossing the 50. As long as it doesn't cross the 200, it looks like it's good price action. So that's how this is where I felt. Everybody was telling me bear market, and I was saying, no, I don't feel that way. I wasn't like prepared for. Again, this was my just ignorance. I'm not great at what I'm not great at this yet. What they told me to do, they said if you want to get good at trading, you have to go through a cycle. You have to go through it every day. You have to analyze it. You have to analyze it. You have to analyze it. You have to watch. You have to learn. Because if you're not watching, you're not learning. If you're not applying the knowledge that you have, like just saying, oh, I could read this chart or I could read that chart doesn't mean that you're good, or doesn't mean that you're going to make money. Some people are making money off of Doge. It doesn't matter. Like he said, if you want to get good at trading, you have to do it every day, and you have to analyze, and you have to practice, and you got to lose money. I'm not saying I'm good at losing money yet. Because I'm up in profit. But there was a time where I was losing money. I guess technically, if you're in a volatile market, losing money is just not okay. So let's analyze this in a way. Here, I'm gonna squash this all the way down. So let's squash it. I should bring up a new chart. So this is 17. This is 19. So in 17, let's say that you start in December 17, right? You start your all-time high, you get hype, you want to make a bunch of money. Everybody's talking about how the price is going to $1 million. Boom, you put some money in and you lose it all. February 19, you're in for a year. Right? You're still, you're 18 and you're 19, right? You're in for a year. Right? You're in for a year. Check it out. It looks like you lost money. It's just because where you were at in the cycle. So I lost money because I didn't know where I was at in the cycle at all. I literally was starting here. Then you have this bear cycle, which you could learn from. But we're talking about years. 19, 20. If you're up here, you don't start making your money back until 21. So you go from January 18 to January 21. So that's 18, 19, 20, 21. That's 3 years of bear cycle where you could think that you're a bad trader. But at the end of the day, this thing is moving on up. So reinvesting in this bear cycle would be the best thing you could do in that scenario. And that's what I did. I doubled down in this bear cycle. So, okay, we did some MA analysis. We did a bunch of my personal trading strategy. And I think we're good. This was a long video. I'm glad I did it. I was almost dreading doing it, but I want to go through thoughts and analyzations, and I want to refine this thing so that I'm not making any mistakes, or like at least losing more money than I want. Whew. I feel good. I feel confident it's over. All right. Talk to you guys later.